Welcome to the new analysis with a Harmonic scanner. In this week I would like to show you, is there any bad pattern formed on the chart detected by the scanner that is in line with the trend and also the technical analysis. Inside the Harmonic scanner, if you have tested, you can see that there is a notification tab where you can select which patterns and also which time frames you would like to track, and when the scanner detects one of these patterns that you have selected on defined time frames, it will be populated here with these details. Each row represents one of the patterns on one of the time frames and for the symbol, with the entry level, target, stop loss, reward to risk, and when it has been formed. Here inside the watch list you can select which symbols you would like to track. You have forex major, minor, and you can add freely which ones you would like to add more. So the scanner detects them and send you notification on Telegram. Inside the monitor you can watch and make the analysis. For example, here is the window where you have the chart, and below that you have patterns detected based on the settings you have selected. Here it is the time frame, which symbols, which patterns, here in more details which symbols you would like to track, and there is below that table with more details. You can see the time frame which you have. The status is a successful, which means it is already been reached the target too. Is it failed, which means the target has been reached as a stop loss, not target 2, and you have, for example, a complete, which means still able for trading, available for trading, which means the stop loss or take profit was not reached. Here you have also the reward to risk, which gives you more precise information what you can expect. So for example, we have here, let's say here, this one, it is on M5, it is a profitable one, which means the price has reached the take profit level 2, not reaching the stop loss. So you can see how the price has played, and more details you can also put here. Then let's go here, notification. I would like to show you that I have received information for the New Zealand dollar against CHF. Here on the chart I already have seen that the price is in line with the trend, and you can see on the daily time frame, when you zoom out a little bit, the price is in the downtrend. So I'm expecting that the price will go further down. When this bad pattern has been formed, it is a bearish bad pattern suggesting further decline in value. And we can see that the D point and also potential reversal zone is right here, where this area of support and resistance level is. Currently it is acting as a support because the price has formed this bullish breakout above that area. So after I have detected that it is in line with the trend, which is the first criteria, then I put these horizontal support and the resistance levels on the chart to see are these levels, which is the entry level, stop loss, take profit level 1 and take profit level 2, are in line with these levels. If they're not, I adjust them slightly. If they are okay, I leave them as it is. Based on this one, what I can see that this potential reversal zone is slightly above this area of resistance, and the price is already formed a bullish breakout. So this means that it is expecting that the price will go further up. The stop loss is below this area of resistance, so we have a bullish breakout above this area of resistance. Now we have also this area of resistance here, which means there is a high potential that the price goes further up, reaching very close to this area of resistance. And we can see in the past, when the price has formed, when the price was bouncing from this area of support, targeting this area of resistance, the price has reached this level here, where this wick is here. The price could not manage to go further up, so I will move stop loss slightly above this wick. We can see that here, just in case if the price reaches this area of resistance, the price do not touch the stop loss level. Then the entry level would be right here, where the price had problems going up and down, which means a confluence between the buyers and the sellers. So that means these open and close price levels of these candles. So I will put them here, right here. So I'm expecting that the price will reach this area, and then potentially also this area of resistance, not going up. But if the price goes up, it will activate stop loss, so this will be a failed one. But let's see how the market will react. In this attempt, we can see that here, when the price formed this bullish breakout, let's zoom in a little bit. The price tried to move higher, but we can see the price has reached this area of resistance. This area of resistance was very hard for the price to make a bullish breakout. So I will also adapt the entry level based on this one. So it will be very close to this area of resistance, but also this here, which I have already mentioned, open and close price of these candles. So I'm expecting the price will reach this area and then potentially move down. Now let's go to the take profit level. Take profit level is slightly below this area of support. We can see in the past when the price was going down, the prices come very close to this area of support and then bouncing back up. So I would move take profit level here, right here at this wick, which means high potentially that the price will making a bearish breakout below this area of support, which means below this I'm expecting that the price will reach this area of support. When the price reaches this area, I will move stop loss below the entry level, just in case if the price goes down then reverses back up going against me. I get out from this trade with a small profit, not waiting all the way, being in the profit right here and then waiting for the price to go all to the stop loss. So I would move from the very big profit to the very big loss. So it is the best when the price reaches take profit level 1. I am not expecting, I am hoping that the price will not return all the way back up while I am in profit. If the price returns back up, then I'm expecting the price will reach this area of resistance like in this example and then retrace back down going into the same direction as I was expecting based on this bearish bad pattern. So the take profit level 2, I would move slightly above this area of support. So in this case, when the price was going down, the price has reached this area of support. So I'm expecting the price will reach the same scenario when the price returns back down, going below this area of support acting. So when the price makes a bearish breakout below this area of support, this is the next arc where I'm expecting. So the stop loss, so the take profit level would be right here. So you can see I have adapted slightly the entry level, stop loss, take profit level 1, 2 based on the technical analysis, because these levels gives me more confident that the price will reach them than waiting for the price here, because the price could reach this area of support, then bounce and return back up completely, not going and reaching my take profit level 2. So it is the best to stay on the safe side, going outside before the price reaches the support level. You know that something sometimes can happen. For example, like in this example, you put the take profit level right here at the support level. The price goes in your direction, but not touching this area support and then reverses back. So you have lost all this profit, and if the price goes even further up, you got stopped out because the stop loss has been activated, but your take profit was very close. So it is the best to go out before the price reaches the specific resistance or support level. This is the area around the support and the resistance levels, calling a supply zone a demand zone. So in this case, it is demand zone that can stretch around this area of support. Why? The open and close price levels, for example, this one and this one, this is the area on the upper side. On the lower side, it is from the area here, from this support and resistance level to this area here. So this is the demand zone around this line, which can also trigger the price to move in one of the directions. So it is the best to be on the safe side and get out from this trade, like in this example. For this analysis, I have only picked this one, New Zealand dollar against CHF, because it is the only one that is in line with the trend. So I am covering only this one in this weekly analysis. If you have any of these patterns that has been detected, feel free to share inside the Telegram. Feel free to check the link below in the comments section so you can join other traders inside Telegram, and also we can discuss these details. There is also a gold membership where I share details during the week. Is there any bad pattern format again on the chart? So I share these details with the traders so they can see which ones has been detected during the week. Also inside the gold membership, inside the Telegram, we can discuss in more details if you have any pattern that you would like to comment. That's all for this week. See you next time and happy trading.